Hello, welcome to the Trading with Ashley show. So I have got a special guest with us today. This is another one of my daughters. Her name is Landry, and today we are going to teach her how to sell covered calls on a stock. Now, all of you remember my other video with my other daughter, Lily, and she was very into learning how to sell puts on Lululemon because that was her favorite store. And now she actually has a full share of Lululemon along with her and my other daughter because I had made enough premium by selling puts to buy them a share of Lululemon. So that was kind of cool. And so I wrangled her together with me today.
Yep.
Landry, tell me what your investing experience is.
Ground zero. I don't have much investing experience at all. I do live at home with her and see her do this every single day, but I personally I haven't put forth the effort to know about it. So I really know nothing, which is so cool because I have this amazing resource and mom and best friend right here to teach me everything. So finally sitting down to get this going and get it started.
Yeah. What do you do for a living, Landry?
So I am a social media manager and marketer. And so I deal with smaller companies around the area and I manage all their social media and use strategy and do content collection for other businesses and clients. So it's really fun. I get to be really creative and I love it. So.
All right. Mm-hmm. Well, do you think if you were able to figure out a way to produce extra income, such as what I'm going to teach you, that would be useful throughout your life?
Oh, absolutely. One thing about me is I have a shopping addiction. So who do you think I get it from? So yes, I definitely think it would be very beneficial in all areas of my life, just because content creation and being my own boss my income can fluctuate a lot. And so having this as another source of income would just be a great way to support myself and my future family. So, yeah.
That's good. I was talking to one of my community members today, and he is now teaching his children that are about the age of Landry and Lily, teaching them how to sell options for a living. And we were saying how great this would have been if we would have known how to do this at the age you are, because you could have quite a bit of wealth built up.
Mm-hmm. And seeing just how much success she has had from it and seeing all the people she helps and how much success they have is truly inspiring. I was telling her we're going to have to sit down and give some extra time for me to learn this because it seems like a lot, but she was like, no, I think you're going to be surprised at how quick you're going to be able to pick it up. So
yes, and actually it was Landry's friends wanting to learn how to trade options, her college friends that were my very first students. And when they picked it up so quickly, that's when I decided to turn to all of you and start to teach you on YouTube. So I really have her and her friends to thank for the career I'm in now.
Yay.
All right, you ready to get started?
Let's get started.
Okay. First, what we're going to do today is we are going to sell covered calls on a stock. Do you even know what that means?
No, not even a little bit.
Covered, uncovered. Okay. When you sell a covered call, the first step, very, very, very first step, audience, is you have to purchase or already have 100 shares of a stock. Because when you sell options, you sell in lots of 100. So one option equals 100 shares, okay? And if you are going to have 100 shares of a stock and you purchase them at one price and you're okay having those shares sold at a higher price, okay, then you can do something called a covered call. The reason they call it covered is you actually have the shares to back up the contract that you're making with somebody else. Then if your shares get called away, if we hit that strike price, you get to keep the premium that they paid you because you agreed to give up your shares, but you also get to keep the appreciation, the difference between the price you bought the stock at and the price it was called away.
Okay.
So you get money everywhere.
Oh, wow. Awesome.
Money. Now you're giving up your shares, so you have to be okay with that. But we're going to talk about when the right time to give up your shares may be, because you don't want to give up your shares too soon in its price life cycle, because then you'll feel like, oh gosh, I got to get those shares back because I really wanted that stock.
Gotcha.
And so we're going to teach you how to actually go through the keystrokes to sell the call on your shares, and then what price you might want to consider to sell the call. So we need to pick a stock. Now, I have tons of stock. I have lots of different stock.
Yeah.
There's probably a stock or two I talk about the most, and I think you may have the stock that I talk about the most, but can you guess which one I am thinking of?
If I'm right, Palantir.
Palantir.
Ding, 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 ding. If I know one thing, it's Palantir. What that is, I don't know.
All right. Well, you may be like Landry. You've heard of Palantir, but you're not sure what it's all about. They were just invited to be a part of the S&P 500. They're going to be included in the S&P 500.
Okay.
And they are now in the S&P 500. That just took place. So now big institutions will have their shares because they try to mimic all the companies in the top 500 companies in the United States. Mm-hmm. And now that they're in there, they're going to start buying it. They already have started to buy it.
Wow. Awesome.
Yeah. So actually Palantir, little does she know, but Palantir, us getting it at the price we got at, I will eventually turn it over to my children, and I will be the coolest mother/grandmother ever that I got them Palantir at such a low price.
She already is.
Years in the future. All right. So we're going to work with Palantir. I hope you are okay with that.
Yeah.
Palantir.
Sounds
okay.
good.
All right, so now we're going to go into the broker, and I'm going to show you how we actually do this. Do you have any questions about the concept of selling calls? Like the whole concept? Like most people might think, well, why don't you just sell them?
Yeah. So far I don't, but if I do have any come up, like why this, I'll ask you. But you pretty much explained it in a really good way.
Okay.
So yeah, I'm ready.
All right, let's go. All right, Landry, now that we're in the computer, I have got Palantir pulled up on the computer, and this is a fun chart with a lot of different colors. We like colors. And it is helping to show you the potential price action of Palantir. And the first thing you're seeing right here, this is what's called a Bollinger Band. You see that gray area? Mm-hmm. And it's kind of like a rubber band of sorts, because when a stock moves up and down, it likes to stay under the cover of the bands. It likes to stay within its Bollinger Band. Now, you can see on Palantir, it came outside of the band. You see this right here? This was on, it looks like September the 9th. But what happened right after it came out of the band? Did it stay out and keep going up? What happened?
No, it looks like it went back into the band.
That's right. And let's see if we can find where Palantir went down under the band. Oh, there we go. This was on 8/5. This was the day that the stock market was a flash crash. And if people bought stocks on that day, they're really happy now because they've gone up quite a bit. But it went under the Bollinger Band right there on August the 5th. And then what happened?
It went back up.
It went back up. Okay, in the band. So it likes to stay under the cover of the band. Now, the band does expand from time to time. But ideally, Landry, what you'll do is you'll buy stocks when they're at the bottom of the band, and you'll sell them when they're at the top of the band. And it's really that simple. So if you're trying to determine what strike price to use, you can look at these bands to give you some guardrails on what might be a good point that you feel comfortable giving up your shares and you're not leaving a lot of money on the table.
Gotcha.
Now, these bands work pretty well other than if there's a big news catalyst or something that will cause them to ignore the bands, then they'll shoot up. If there's something really exciting and bullish with Palantir, it may jump out of the band and then the band will expand, but it will eventually usually retreat back down.
Gotcha.
Okay. So keeping that in mind, and let's look at this. We're looking at the 1 month chart because if we're going to sell covered calls, I go either a week out or a month out. If we go a week out, I look at the month chart. If we go 1 month out, I look at the 3 month chart because that gives me more time. You studied in school about statistics and more data. Mm-hmm. The more data you have, the better decisions you make. Right. So the more data we have, we can make a better decision. So let's assume in this scenario, I'm looking at the 3 month chart. Let's assume we want to sell a covered call on Palantir that expires a month from now. So looking at this band, and based on what I just taught you, what might be a really good price to sell our shares at?
Since we sell it when it gets to the top of the band, about $40.
Yeah. So we could sell a covered call at around 40. Now, if we want to just get premium, agreeing to give up our shares, but we'd rather kind of hold on to our Palantir because we think it could fall back lower and then start riding higher again, then we might shoot right above the band. And there's no guarantee that these shares won't get called away. But the good news is if they're called away at the top of the band or right above it, then usually in short order it comes back down and you can buy it back.
Oh, okay. Gotcha.
So that kind of makes it nice.
Mm-hmm.
But where people mess up is they don't know, they don't have these technical analysis tools, and they don't know where to choose a strike price. Like today, it was trading at 36. They may say, oh, well, 38 looks good. But they don't realize they're leaving a lot of opportunity on the table.
Oh, okay.
Okay. So next, we're going to go into the broker, and I am going to show you the keystrokes on how this works so that you can actually sell a covered call.
Okay.
Okay. Okay, Landry, we are in the broker now. Now, we want to make sure I have enough for 100 shares.
Mm-hmm.
So here's Palantir right here. Here's my position. How many shares do we have?
5,000.
5,000. So if I wanted to sell covered calls on all of my Palantir shares, how many covered calls would I be able to sell with 5,000 shares of Palantir?
50.
Very good.
Really?
Very good.
Yay.
You did good. Yay. You passed the first step. I'm so glad that you know basic math. That's going to really help you in learning how to do this.
Hope it helps me in life in general.
Okay, so let's assume, we were going to do that. So you're going to see how much money we can make. Now, our position size is rather large because I've been accumulating this for quite some time, and I've been selling it for profit and then buying it lower. So this group of shares that I have right now actually already has like a 33% profit, but I actually started buying this when it was closer to $13. So it has more than doubled in the short amount of time I've been trading it. So what we're going to do, we are going to agree to sell covered calls on our shares. And we know our strike prices now. We want to go around 40, maybe 41 for next month. Okay, so let's go and do the keystrokes. So when I trade this, I'm going to go to trade. This is in the Merrill Lynch platform. So you go to trade options, and you put in your symbol right here for what you're trading. This is Palantir. And then what we want to do, we want to go look at the option chain. So you click that and it opens it up. And basically what you're looking at, Landry, are if you're selling puts, those are to the right. And if you're selling calls, those are to the left. So we're not selling puts today. We did that with Lily. But with you, we're going to be selling calls. So we're going to be looking on the left side of this page right here. Now, we need to select an expiration date. So I said, let's go about a month out. Now, here's something cool that you need to know. Most institutions do all of their option selling on the third Friday of every month.
Okay.
And so if you're going to sell monthly options versus weekly, it's good to go to that third Friday because you're going to see where they're placing all of their trades. And that's helpful so that you can make the best decision. 10/18 is the third Friday, and that's going to be our expiration date. So the expiration date is the date that we need to see what Palantir is trading at that point. And if it's trading at your strike price or higher, it's going to call your shares away at the close of day. Okay? All right, so the 18th is the day we're settled on. I will have you know the further out you go, the more premium you're going to get. And the reason for that is the further out you go, the more we don't know what's going to happen in the future with contracts, with government regulations, and all the things that could affect the stock price.
Okay.
So you're compensated heavier for going further out because the unknown. Okay, so looking on our option chain, here's all the pricing. Now, remember we settled in on that $40 strike?
Right.
Look at this, Landry. Everybody else has too. This is the highest amount of open interest on the chain. It's right at $40. So they're looking at the same things that you and I are looking at. It's got 15,000. The one above it only has 430.
Wow,
the one
big jump.
Yeah. The one below it only has 256. So this is where all the action is. But if you want to be super safe, what you like to do is line yourself up right behind all this action, because if these orders start filling, more than likely that will push the price down and you may be a little bit safer right here at 40.50. So that's something to consider if you want to hold on to your shares. Now, if we sell the $40 call against our shares, we're going to receive 40 cents a share. If we sell the 40.50, we're going to receive only 32 cents, but we will be receiving 50 cents more in our actual shares if they're called away.
Gotcha.
Okay. So let's do some calculations. You ready to do some math? You got your phone with you?
Yep.
Let's look at it. If we are going to receive, let's assume we're going to do this 40.50 one. if we're going to get 32 cents a share, you would have to multiply 5,000 times 0.32. And what does that equal?
1,600.
Okay. Landry, they are going to be willing to give us $1,600 just because we are willing to give up our shares at a price higher than we bought them for.
Wow, that's awesome.
So this $1,600 is ours to keep, regardless of if our shares get called away or not.
Okay, I love it. Let's do it.
Okay. So in this scenario, two things could happen. Our shares, when we get to this date on October the 18th, if Palantir is trading right here at $39.50, we agreed to give it up at $40.50. So if that's the case, do you think we have to give up our shares if it's trading at $39.50?
No.
Nope. And then if we don't have to give up our shares, do you think we get to keep all of that $1,600?
Yep.
Hey, we get to keep our shares?
Yep.
Well, okay.
Sounds like a good deal to me.
So now if it does hit our strike price, we do have to give up our shares, but let's calculate how much money we'll receive if we give up our shares.
Okay.
Okay, so we already got our $1,600, right? We don't have to give that up. And if our shares are called away, let's go look back at how much money we'll make from our shares being called away. Okay. We take our sell price of $40.50 and we subtract about $27. That's what we paid. That equals $13.50. Then you take that $13.50 a share in stock appreciation, multiply it by 5,000. That is going to give you $67,500 in stock appreciation. Now we want to add to that what we received in premium when we sold the call. That's $1,600. So that brings the grand total on this trade of $69,100. That is a lot of money just for agreeing to give up our shares in profit.
Yeah.
Okay. Oh, isn't that awesome?
Yeah.
So you see why I love how to do this. I Now I want to share with you what is considered a risk. It's not a true risk to your portfolio because you are selling your shares at a point higher than you purchased them. But it will look like you're losing, and it'll be frustrating if on our day of expiration, Palantir is trading at, let's say, $42. Then if you had not sold a call on them, you would have actually received 50 cents more a share. But keep in mind, you did get that premium, that $1,600. That helps make you feel a little bit better because you got that premium. Now, what will happen if we get to this date and Palantir is not at your strike price and it expires worthless? I know it sounds weird to say it expires worthless, but that's actually good because that means you keep that $1,600 and the contract is worthless because they don't get your shares.
Gotcha.
So you think you could do this?
I think I could do this.
Okay. Let's go look at how this will look on the order ticket in a broker. We're going to use Merrill, but they all look very similar when you are placing the order. We are going to sell to open because we're selling the call and we're opening the trade. And 50 is the amount we had agreed to. Our expiration date was October 18th. Our strike price was $40.50. And this is a call. And the one thing I really appreciate about Merrill is they show you a range right here. You see today, this stock actually traded, this option traded for anywhere from 31 cents all the way up to 72. So had we done this earlier and Palantir was rising higher, instead of just that 32 cents, we could have gotten 72 cents. That would be double the 1,600 that we're getting. Yeah. So this actually helps you make a better decision because you could come in here and do what's called a limit order and say, I'll be willing to sell this contract, but I see it was as high as 72, so I am not going to accept a penny less than, let's say, 65. And then you could make it good for a day or longer. And then if it actually gets to that price, it'll pick up your contract and you'll get a lot more than just the market price.
Wow, okay.
So that's something we want to consider when we're trading. And Merrill helps you do that because it puts it right here on the screen. It makes it easier.
Thank you, Merrill.
Yeah, Merrill. All right, that's it, Landry. That's it. You now know how to sell covered calls against your shares, and it is best to do this on a green day for the stock because you are going to get more premium, and quite frankly, you'll make a better decision because you'll see how high it's going if you sell covered calls on green days. All right, Landry, thank you so much for being my guinea pig today so that everyone else can figure out how to do this for themselves. Do you think this is something you may be able to do now that, we'll get you make sure we have 100 shares of Palantir and you start having this as an income stream for yourself?
Yeah, absolutely. I think being able to fit this into my daily routine, just checking in on it and starting to do these strategies like this, then I'll really be able to let this take off and grow my income. So
yeah, because it just doesn't take a lot of time. Like you can do this while you in between social media.
Yeah,
gigs.
absolutely.
So, well, I want to thank all of you for being a part of today's show. And remember that if you are with Trading with Ashley, there is no trader left behind. Landry, this is the bull. Do you know what this is for?
What?
No, it's the Bull of Wall Street. Y'all, what are we going to do with Landry?
I thought it stood for something.
It does, Wall Street. All right.
Help me.
Help her. Thank you, Landry. I love you.
I love you so much.
Girl.
Just smack me.
If you loved this video, then be sure to click right here. This is the video of me showing my teenager how to sell cash secured puts.